may this be one of the best moments of your life. You're listening to the Business Mirror Podcast for a broader look on business with Senior Editor Dennis Estopace.
Good day, this is Dennis Estopace and welcome to Business Mondays with BM, a segment of the BM Broader Look podcast that focuses on the Philippine stock market. Business Mondays with BM is based on the stock market outlook story written by Business Mirror reporter VG Kabuwag and comes out every Monday. For the text version online, please go to www.businessmirror.com.ph and search for Stock Market Outlook. For the print edition, please go to the companies section of the Business Mirror newspaper. Let's get on with the story. The decline last week by share prices was not as steep as expected, with investors already pricing in the low economic data for the first quarter of the year. The market appeared appeased by the speech of President Duterte, who apologized for what he called hurting words against water concessionaires led by the Ayalas and the group of companies of Manuel V. Pangilinan. The benchmark Philippine Stock Exchange Index fell 78.77 points to close at 5,621.94 points. A huge sell-off on Monday tapered after President Duterte offered his hand of reconciliation. The share prices of the Ayala-led firms and those by Pangilinan rose the next day. Christopher Mangun, research head at AAA Securities Incorporated, said however the figures for the gross domestic product growth for the first quarter at negative 0.2% came as a surprise to many. Mangun said analysts and investors expected some growth in the first quarter as the lockdown only started in the middle of March. This revelation, Mangun added, dulled sentiments which caused investors to take some money off the table, causing the market to end the week lower. Inflation for the month of April, meanwhile, came in at 2.2% as a result of lower world oil prices. The figure nonetheless is closer to the lower end of government's target. The average daily trading for the week was low at 5.01 billion pesos and foreign investors were still net sellers at 2.46 billion pesos. All of the sub-indices ended on the red with the exception of the property index, which rose 13.05 points to close at 2,934.97 points. The broader all shares index was down 42.03 to close at 3,403.80. The financials index declined 40.59 to 1,148.08. The industrial index shed 148.14 to close at 7,326.79. The holding firms index fell 12.02 to 5,532.27. The services index dropped 51.14 to close at 1,322.68, and the mining and oil index decreased 187.72 to close at 4,520.85. For the week, losers outnumbered gainers 157 to 65, while 20 shares were unchanged. The top gainers for the week were Manila Broadcasting Company, Ayala Corporation, Da Vinci Capital Holdings Incorporated, Manila Water Company Incorporated, SBS Philippines Corporation, and Discovery World Corporation. The top losers, on the other hand, were Mabuhay Holdings Corporation, Cirtec Holdings Philippines Corporation, Imperial Resources Incorporated, Premier Horizon Alliance Corporation, Bogo Medellin Milling Company Incorporated, and Macro Asia Corporation. This week, share prices may remain sideways or may even decline as investors start to digest the economic figures released last week. Investors are still mainly focused on the sentiment rather than fundamentals, which are seen to get worse before getting better, Mangun said. Mangun added that the main index may remain between 5,500 points and 6,000 points as investors observe the effects of lifting quarantine restrictions. On the local front, the recovery has been broad, as most companies have gained 30% to 50% from their lows several weeks ago, according to Mangun. Mangun added that telecommunications and consumer-based companies have led the charge, while property firms and banks have remained laggards. Mangun said they see this trend will continue in the medium term until the Philippines shows it is succeeding in the battle against the coronavirus disease 2019. Jafet Luis Tanchanco, Senior Research Analyst at PhilStocks Financials Incorporated, said the local market is seen to have a downward bias as the economic outlook remains dim due to the adverse effects of the COVID-19 spread. According to Tanchanco, with the second quarter still suffering from the same pandemic with an even longer enhanced community quarantine period, especially in major regions in terms of economic contribution, deeper losses could be expected. In short, the first quarter gross domestic product figures are hinting that the worst is yet to come, primarily in this current quarter, Tanchanco added. For the stock picks, broker Regina Capital and Development Corporation advised to buy the stock of PLDT Incorporated when the company's support price holds between 1,222 pesos and 1,172 pesos per share. A sudden shift to sell signs pushed the stock closer to its immediate support at 1,222 pesos, Regina Capital said. Regina Capital advises to expect some challenges to this lower bound, seeing as selling momentum looks to be climbing. Nevertheless, Regina Capital said the downward pressure likely won't be enough to push PLDT Incorporated significantly lower. Hence, Regina Capital said the next support at 1,172 pesos will likely hold. PLDT share price closed Friday at 1,207 pesos apiece. Meanwhile, Regina Capital recommends to investors to take profits on the stock of Ayala Corporation as the stock's rally is not showing signs of slowing down anytime soon, especially with indicators still pointing to strong buy signs. Regina Capital said after having breached the initial resistance at 648 pesos, there is increasing likelihood of Ayala Corporation managing to sustain the breakout. The Ayala Corporation's shares closed last week at 704 pesos apiece.
Thank you for listening to the Business Mirror podcast. For a broader look on business, follow us on Facebook and Twitter at Business Mirror. Until next time.